Will investing in the Canara HSBC Life Insurance Alpha Wealth Plan enhance your quality of life in the long run? Let us find out the answer to this question through an in-depth analysis in this video. So hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now before analyzing this policy, let us first understand a few basic details about it. So this is an individual unit linked life insurance savings plan. So some of the key features of the policy are: you get to pay premium one time for a limited period or for the entire policy term, and there is life cover available throughout the policy term, and you get to choose from 3 plan options based on your life stages called Alpha Infirst Plus, Alpha Premium Plus, and Alpha Life Plus. Loyalty additions and wealth boosters enhances your corpus. 100% of the mortality charges deducted during the policy term or returned at maturity, and you get to choose systematic withdrawal funds based on your financial need, and you also get to select from a range of 9 diverse fund options in this policy. So these are some of the key features of the policy, and there are benefits like maturity benefit and death benefit, which will all differ based on the plan variant you have opted for. And also, as a unit link policy, there are various charges that will be deducted from your premium, like premium allocation charge, policy administration charge, mortality charge, premium funding benefit charges, fund management charge, surrender charge, switching charge. So all these charges are present in this plan, which means these costs will definitely impact your returns in the long run. So these charges are a burden to an investor as they reduce their investment value in the long run. So now let us take a look at some of the advantages of investing in this policy. So milestone withdrawal option allows to withdraw 20% of the available funds after the completion of the 10th policy year and every 5th year thereafter. A fixed percentage of the fund value will be withdrawn and paid to the policyholder at a chosen frequency starting from the 11th policy year. Under the systematic withdrawal option, partial withdrawals are allowed on completion of 5 policy years. The settlement option allows the investors to receive the maturity benefit in installments. The premium reduction option is also allowed after 5 policy year premiums are being paid. Premium redirection and switching of funds are allowed, and change in premium paying term and premium payment mode is allowed. So you have the option to increase your policy term, and you can alter like increase or decrease the sum assured as well. So these are some of the advantages. However, the disadvantages are the plan option once chosen can't be changed after inception. So the mortality charges are returned at maturity without considering the time value of the money concept. The lock-in period is 5 years for surrendering or partial withdrawal as well. So these are some of the drawbacks of investing in this policy. Now, as we have a basic idea about this policy, let us move on to the analysis part of the video. But if you do want to know more about certain aspects of the policy in detail, you can always refer to the policy brochure. So now we are going to calculate the internal rate of return of this policy based on the benefit illustration given in the policy brochure to help us make a more informed decision. So for calculation purpose, let us assume that a 40-year-old male has chosen this policy with the Alpha Premium Plus variant. So the sum assured is 50 lakhs and the annualized premium is 5 lakhs. The policy term and premium paying term are both 15 years, and the fund value will be available at maturity. So the tabular column presented on the screen shows 2 future assumed returns featuring 4 and 8% per annum, just to show you how this policy can perform at both extremes, whether it can be a worst case scenario or at a best case scenario, as this policy's returns are not guaranteed. But these 4 and 8% returns are not also guaranteed returns. These are just for example purpose to show you how this policy can perform at both extremes. So the fund value at 4% scenario is 90.35 lakhs. The net IRR under the 4% scenario is 2.29%. So the fund value under the 8% scenario is 125.13 lakhs. So the net IRR under the 8% scenario is 6.17%. So one important point to be noted here that is that the ULIP policy issued on or after 1 to 2021 shall not be exempt under section 10(10)(d) if the premium payable surpasses 2,50,000 during the policy period for any policy year. So the maturity value given in this example are pre-tax value. So if you consider the tax, then the returns will be even lower than the calculated figures. So the calculated return is not on par with other market linked products. So investing in this policy will not aid you in your wealth accumulation process in the long run. So as this policy is not giving us a desirable outcome that we need, that is gaining an inflation beating return, we are going to do a comparative analysis now by doing a alternative strategy. So here we are going to aim to yield better returns by alternatively investing the same premium in both insurance and investments separately. So for life cover purpose, we have opted for a pure term life insurance policy for a sum of 50 lakhs, which would cost us only an annual premium of 10,600 rupees. So the policy term and the premium paying term is 15 years. So in the earlier example, the annual cash outflow was 5 lakhs. So you will be left with 4,89,500 rupees just for investment. So you can choose either debt or equity asset classes. So here we have chosen PPF for the debt investment strategy and equity mutual fund for the equity investment strategy. So the maximum annual investment amount in a PPF account is 1.5 lakhs. So the given figures surpass the limit. This is negligible as this is for just example purpose. So the final maturity value in the PPF account is 1.32 crores and the IRR for pure term plus PPF investment yields 6.85%. The equity mutual fund value at the end of 15 years is 2.04 crores, which is the pre-tax value. So capital gains tax arises while exiting the fund. So let us aside the tax liability from the proceeds. This leaves you with a post-tax value of 1.88 crores. So here we have also given the tax calculation for equity mutual fund presented on a small tabular column in the screen, which you can pause and see. So investing in these alternate options definitely yields you higher returns than inflation. As a result, this results in wealth accumulation in the long run. So the IRR analysis here clearly depicts that investing in Canara policy may leave you in a deficit in acquiring the required corpus. Then what is the final verdict? Is investing in the Canara HSBC life insurance alpha wealth plan worth it or not? So this policy has various plan options that offer premium waiver benefits and lifelong cover. Also, it consists of 5 investment strategies and 8 fund options to serve different risk appetite investors. This plan seems like a good tool to invest in the market in a disciplined manner. However, the return analysis shows that the potential returns are not in favor of a long-term investor. The corpus accumulated through investment in Canara policy will eventually affect your financial plan. Various charges, high agent commissions, and lack of transparency are the main drawbacks of this policy. So keep your financial plan on track. It is advisable to opt for a pure term life insurance policy. So also invest in a diversified asset class to accomplish all your financial goals. Choosing a good product takes time. Don't get carried away by false propaganda, especially made on social media platforms. And staying ahead of the financial plan has always been everyone's wish. If you need any assistance in selecting the investment or insurance product, you can consult a certified financial planner for professional guidance.
If you want to read more about this policy, then you can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.